The IRS has issued a warning that directly affects anyone expecting a large tax refund this year. Millions of Americans are preparing to file as fast as possible because many are counting on thousands of dollars coming back from the federal government. But the IRS and tax professionals are now saying the same thing. Rushing to file in early 2026 could cause delays, errors, and serious refund problems. The IRS has confirmed that it will begin accepting federal tax returns on Monday, January 26th. That is the official opening of tax season. But just because returns can be filed that day does not mean they should be filed that day. This year, filing too fast could actually slow you down. Over the summer of 2025, a massive tax law was signed into effect. That law changed dozens of rules across the tax system. Because of those changes, the IRS has had to rebuild large portions of its processing software and internal systems. Every major credit, deduction, and income category affected by the new law had to be reprogrammed. At the same time, the IRS has lost more than 25% of its workforce. That is why people are anxious. $4,000 is life-changing money for many households. People want it immediately. But here's the reality. Filing early does not guarantee faster money this year. In fact, it may increase the chance of delays. This filing season includes major new provisions that change calculations. The child tax credit increased from $2,000 to $2,200. Federal taxes on tips were eliminated. Federal taxes on overtime were eliminated. Interest on certain vehicle loans is now deductible. The SALT deduction increased from $10,000 to $40,000. A new senior deduction of $6,000 for individuals and $12,000 for couples was added. Each of these changes requires updated IRS systems and updated tax software. If you file before those systems and programs are fully synchronized, errors become more likely. One of the most misunderstood changes is the senior deduction. This is not a payment, it is not a check, it is not a refund by itself. It is a deduction that reduces taxable income. Many people still believe it means they will receive $6,000 or $12,000 in cash. That is incorrect. Another misunderstood claim is no taxes on Social Security. That is also incorrect. Social Security is still taxable at the federal level. The new senior deduction reduces or eliminates taxes for about 88% of beneficiaries. But about 12% will still owe federal tax on their Social Security income. Several states also still tax Social Security. Even if federal tax is reduced, state tax may still apply depending on where you live. This year, small mistakes matter more than ever. A wrong credit amount, a missing document, a mismatched income figure. Any of these can trigger a manual review. Manual reviews are slow. They require human staff, and the IRS has fewer staff than before. The IRS still maintains its standard guidance, allow 21 days from filing before expecting refund information. That means they will not provide meaningful answers before that period passes. The Where's My Refund tool will still be available, but updates may move slower this year because of staffing shortages and manual reviews. Another major change affects how refunds are paid. As of October 1st, 2025, paper refund checks were eliminated. All federal refunds must now be sent electronically. If your return does not include valid direct deposit information, your refund will not be processed normally. Anyone filing a return this year must ensure correct bank routing number, correct account number, account in your own name or authorized for deposit. A single-digit error can delay your refund for weeks or even months. This is why professionals are urging people to slow down. Filing early does not mean getting paid early if the return is wrong, incomplete, or processed through unstable systems. The risk this year is not missing the opening day. The risk is filing before everything is ready. Tax professionals are advising many clients to wait until all tax documents are received, W-2s are finalized, 1099s are complete. Interest and dividend statements are posted. Software updates are finalized. IRS systems are fully calibrated. That may mean waiting a few extra weeks after January 26th. This is not about being lazy. It is about being accurate. In a year with massive rule changes and fewer IRS workers, accuracy matters more than speed. If your return contains incorrect credit calculations, missing forms, or mismatched data, it can be flagged for review. That can delay your refund far longer than simply waiting to file carefully. This is also the first year these new credits and deductions are being processed at scale. That means more glitches are likely. The child tax credit change alone affects tens of millions of families. The SALT deduction change affects millions more. The senior deduction affects tens of millions of retirees. Tips and overtime exclusions affect millions of workers. All of those groups filing at the same time creates system strain. Add in reduced staffing, and you have a perfect storm for processing delays. Another factor is refund fraud prevention. The IRS uses automated systems to detect suspicious returns. New rules create new patterns. Those systems may flag legitimate returns simply because they look unusual under new laws. That means more people may be pulled into review even if they did nothing wrong. Once a return is in review, it is not fast. It can take weeks or months to resolve. This is why the message from professionals is consistent. Do not file until you are sure your information is complete and correct. Do not rush just because refunds are large. Do not assume early filing equals fast payment. This is shaping up to be the largest refund season in history, but it is also one of the most complex, and complexity always slows systems down. If you depend on your refund to pay bills, cover rent, or catch up on expenses, the worst outcome is having it delayed because of a preventable error. Waiting 2 extra weeks to file correctly is better than waiting 2 extra months to fix a mistake. The safest strategy this year is simple. Gather all documents, verify all numbers, confirm direct deposit details, use updated software, double-check new credits and deductions. Only then should you file. The IRS is under pressure. Workers are under pressure. Systems are under pressure. Refund demand is massive. That combination means this is not the year to rush. Large refunds are coming. Billions of dollars will flow back to taxpayers. But how fast you get your money depends more on accuracy than speed. Filing first does not make you first in line if your return is wrong. The people who get paid fastest this year will be the people who file correctly. The people who rush are more likely to wait. Tax season in 2026 is not about racing to file. It is about filing right. Because once your return is submitted, fixing mistakes is slow. This is the year where careful beats fast. Key takeaway: the IRS will accept returns starting January 26th, but this is not a normal filing season. Major tax law changes, massive refunds, and reduced staffing mean early filing could backfire. Large refunds are coming, but speed is not guaranteed. Accuracy, complete documents, and correct banking information will matter more this year than ever before.